Hey traders, Akil Stokes here. Welcome to another episode of the Trading Blog. In today's episode, we're going to take a look at how to create a rules-based trading strategy. And we're going to do so by sharing with you some footage from today's live trading room. Now, if you guys are interested in more free training on this method, meaning how to build out an if-then thought process, OODA loop theory, make sure you head over to our website, www.tradeempowered.com, and click the Learn to Trade tab, I guess, and check out our free training. It's called Into the Gray. It's about, I think, an hour and a half, 2 hours long. So make sure you put some time aside so you can really take it all in at once. But that's going to be an excellent training lesson to follow up on after viewing this video. And of course, it's 100% free. Lastly, before we get into today's footage, I do have a request for you. It would be a big favor to me if you would take the time to hit that like button, take the time to hit that share button, and just spread the word of this video. This is something that I have a lot of fun doing. I have a lot of fun doing it because it reaches so many newer traders, and I can see the comments each and every day that light bulbs are going off and starting to have a positive effect and really change the view of what trading actually is. The internet holds this view that trading is this get rich quick scheme and you're going to make $1 million that easy. And well, all of us here at Trade Empowered, we try really hard to spread a message of reality. That way traders have a realistic impression, a realistic expectation when they go off on this journey, and they're not discouraged when they don't meet whatever high expectation they had before. So each time you like this video, each time you share it, it allows us to spread that word and spread that message. So thank you in advance, and I hope you guys enjoyed today's footage. Still trying to figure out what my trading plan is. So right now you're not trading live money, are you, or anything like that? Or demo? All right, so the first thing I would do is stop trading live money. That would be my first advice, because why would you trade live money if you don't know what you're doing? And you say, just to feel what it's like to trade. Well, here's the thing. I'm not a big fan of wasting money. If you're just going to throw money away, you might as well just give it to a charity. Then it goes towards a better cause. Now, I understand you want to have the feeling of using live money, and that's important because you want to deal with emotions. But it's irrelevant when you don't have a plan for what you're doing. So starting with a small account and getting used to feeling live money, it's good once you have a trading plan, once you have rules of engagement, once you have a clear, concise rules for what you're doing. Because now you have an idea of what you want to do, and you're getting that feeling of using live money. But when you're using live money and you're not really sure what you're doing, do you see how that's just like throwing money away? Does that make sense, guys? I don't mean that in an offensive way, but you're still in the process right now where you're trying to figure out how do you want to, you're still in your experimentative building a plan process. So for right now, the goal shouldn't be to get used to the feeling of using live money, because right now you're not even sure how you're trading. Right? Wait until you have an idea for how you're trading, then you can experiment with live money to get that feeling. But right now you're just not sure. So you want to go in order. So you want to handle that step first. So what I would do in this situation is I would just track both of these predictions. Right? In either one, you're expecting a pullback. Right? And the one on the right, you're expecting a pullback in the previous your previous trend line or your channel line, and then a continuation down. In the one on the left, you're expecting a continuation higher in the form of a head and shoulders formation. So what you want to do with this is you have the very basic elements of a trading plan here. You've made a prediction. You have an idea of what you're looking for, which is good. That's the first step. Now, what's the second step, guys? So this is a good start. What's the second step? What would you guys say? Let's work through this together. David says track results. What comes before tracking results? What comes before testing it? Nope. What comes before testing it? What do you need before testing it? There we go. The next step is develop rules. So, and we like to teach it like this. When I teach strategy development and rule development, I'm actually working with a trader with this. Been working with him for a while. He's kind of struggling in this area. But you want to make the process as simple as possible. We teach that by using that if-then syntax, right? Everyone's familiar with that. If-then, kind of like I'm the furthest thing from a computer programmer. But imagine if you were programming a computer system. If mouse button is clicked, then take me to this screen, right? Probably the worst example, but again, I'm the furthest. I can turn a computer on and off, and that's about it. But that's the next step you want to do. You want to start developing rules, Fred. So you want to say, if price action, let's look at this example. If price action comes back into your trend line, right? Then what do you need to occur to enter the trade? Because you can easily have both of these setups on your radar, right? Here's how you can do it, right? I'm gonna drop some knowledge on you real quick. So we're looking at Aussie dollar 4 hour, right? Let's go down to the Quattro. Boom. And then I'll do my analysis a little bit later. So here's what Fred's looking at, right? Looking at this this channel right here. And there's two opportunities. One is the retest of structure here and a continuation down. The other is trading a head and shoulders pattern, right? And projecting a potential, what was it, an advanced pattern formation on there? Projecting maybe a potential advanced pattern formation. So, right? You have one move, you have one scenario where you're looking to get bullish, you have another scenario where you're looking to get bearish. Now, I always tell you guys, if you're going to start out as traders, right, pick a single way to trade. Pick either a trend continuation way or a counter trend trading way, right? Because that's gonna stop with those conflicting signals. Because right now you're getting conflicting signals. You don't know whether to buy or sell. If you buy right now, you're going to move up, and then you may have to sell it. If you sell, you're not going to see your buy fully out. And you're going to be all over the place. So the first thing I would recommend is pick one of these styles and focus on it. But if you are going to do both, this is where you need to have filters, and this is where you need to have really strict rules. So use your if-then thought process. So if price action retraces into a trend line, then what do you need to take the trade? Candlestick pattern. What type of candlestick pattern? Be specific. When you're writing your rules, they should be so specific that a random person that knows very little about trading should be able to look at them and follow along. Hanging Man, Doji, Shooting Star, Engulfing. Okay, any of those or just single one? Any of those? All right, let's say, so if price action retraces into trend line, then Fred needs either a Hanging Man, a Doji, a Shooting Star, or an engulfing candle to enter the trade. Boom. So what you do is you wait. You wait until price action reaches that trend line or wherever that zone that you've identified, and you wait for that specific candlestick formation to get short. So if I get Hanging Man, Doji, Shooting Star, or engulfing candle, then I get short. All right. If I'm short, then where do targets go? $127.2 taken from where? From this previous leg right here? We'll just do that for now. And again, this is just, we're not, don't worry about creating real rules. This is just the process of what you go through when you're creating a rules-based trading strategy, right? So, all right, so targets go there. Where do your stops go? And this could be anyone. It doesn't have to be Fred, guys. Again, we're showing an example of how to create a rules-based system. Where do stops go? Let's say entries, let's say you get entered right here off the candlestick formation. keep it blue. Purple. Stop goes 74.55. Why? Why 74.55? I need a specific rule. Is that because it's 10 pips above the high? Can't just be higher. Give me a specific rule. How much higher? How much higher? 74.55 is 10 pips higher. You want to use that? Let's use that. Again, we're trying to save time here. All right. So if I'm entered on blah, 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 then stop loss goes 10 pips above previous structure highs, right? Which is right here. So boom. All right. Now you set up your trade, right? You've got rules for entries, stops, and targets. You know exactly what needs to happen in order for you to take the trade. Make sense, guys? Now, being a head and shoulder trader, how do you trade your head and shoulders? Do you trade them at the shoulder or do you trade them at the retest of the neckline? You trade them at the shoulder. Okay, that's going to make things funky. All right. So what do you need in order to take a trade at the shoulder? Where does price action have to come to first and foremost? If price action comes to I don't want to hear around. Around same price as the previous shoulder. I need to be specific. Around, what does around mean? Are we around right now? Was around up here? Is around down here? What does around mean? I'm a new trader. I need specific directions. What does around? Please define around. Does it have to come to the lowest close of the previous shoulder? The lowest low? Does it have to be in a range here? The halfway point, a 50% move of the lowest shoulder move? Right? We need to define around. So let's say price action comes here. Let's say our around is the lowest close, right? The lowest close of the previous shoulder. That's where our around comes to. It has to hit that mark. And again, these aren't real rules, guys. Don't go out and trade this. We're just showing an example of building a rules-based trading system, right? So if price action comes to our level, right? If price action comes to the lowest close of our left shoulder, then I need what to enter? Same thing, candlestick thing. What is the entry reason? Same things before, the different the hanging man, doji, any of the candlestick formations. If price action comes to the lowest close of my left shoulder, then I need what to enter the trade? All right, so yeah, same thing, engulfing, hammer, doji, right? So that would be your trade entry right here. And then you do the same process. You gotta, where do stops need to go? And you make a rule for stops, you make a rule for targets, all of that fun stuff. We're not gonna go through all of that again. So right now you've got two conflicting setups, right? Because you can potentially be short on your retest of a channel. And then if you get down here, you're gonna get a separate signal to get long your head and shoulders formation at that shoulder. So this is where you need to put in yet another rule. And this is why it's hard to do both. I wouldn't recommend doing it at first, at least. When you get more experience, you'll have many more filters. But you need to create a rule that tells you which trade to stick with. And it could be as simple as I always stick with the first trade I'm in. It could be a rule that says I always stop in reverse. Right? But you're going to have to come up with some type of rule on how to handle this situation. How to go from being short to being long if you're going to make that change. Make sense? But you want to take the thinking process out of it, right? Traders get into trouble because we think, right? Become robotic. Have a rules-based system for everything you do. So now when price action makes it, when you get filled up here, right? When you get filled up here and price is working its way down and you're coming towards this level and you're starting to see that head and shoulders or that left shoulder approach, instead of freaking out and doing whatever the market wants you to do, meaning the market starts to pause a little bit, you're like, oh no, here's the reversal. Here's the reversal. I got to get out of this trade. And you get out of the trade, right? You stop in reverse and get the other way, and the market does that. And you're like, oh, I should have stuck with the original trade. I knew it was going to go lower, right? Now you have rules that tell you exactly what to do. And what we do is we eliminate those emotional demons that occur right here. We eliminate those trading errors that we make that cause us to lose money. And we become much more consistent with the process. Then should I monitor my trades or simply take it and never watch it again? That's up to you. You can set it and forget it. You can actively manage it. Either way. Are you going to have rules on trailing stops? If so, then you're probably going to need to actively manage it on a lower time frame. If you have no rules about moving stops or managing a trade, I would say set it and forget it, right? Why put yourself through the stress of staring at a screen, putting yourself through that pain and giving yourself more opportunity to make a mistake? Go down to the golf course, right? Go to the driving range. Work on the short game, right? The trade can only do two things once you're in it, right? You can win or lose. So there's only two outcomes. Yeah, when you sit here and watch it, watch it. Go to our YouTube page. Watch this Trading Powered FX YouTube page and watch a. It should be in the My Best Stuff. Watch a video called The Angry Trader. And that's a perfect example of what happens when you just sit there and watch a trade tick by tick. Same example as we gave earlier in the day. I'm not sure if you were here for that, Fred. We talked about our traders had a big win on dollar yen. I think, was it 200 pips, something like that? And we talked about kind of the emotional swings that happen with that trade from going from, oh, I'm losing some money, oh, to maybe I should get out at break even, to, oh, I'm up money, but I'm not at my targets yet. Maybe I should just close out, right? You don't go through all those emotional swings if you're not there to watch the chart. And many traders say their best trades come from the trades where they're just not around. They come back and like, oh, it hit targets. But when you're sitting there and watching it, it's just torturing yourself, right? You're just slowly pulling your eyelashes out. Each one tick at a time. Pluck, 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 pluck. And eventually you give into the pain and you make a mistake. So rules-based trading, that's the best advice I can give you. So I'm sorry I couldn't give you an answer on which trade to take. I don't know what the market's going to do. As always, the market will do what it wants, when it wants to do it. Our job is to be involved. So if the market does this, then this is how I'm going to take advantage of it. If the market does that, then this is how I'm going to take advantage of that move. So we plan out, right? We plan out our opportunities, and then we just prepare, and then execute the trade when it gets there. So, yeah, when you have clear rules, man, it's everything. All right, traders. So I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradingPower.com website, or also take a look, and you'll see more videos available for you. Have a good one.